U.S. consumers have never felt worse in the last 75 years, and the market gets a bounce because the federal government might reopen? Robschild. Hi everybody, it's Sunday, November 9th, 2025. Our episode starts with our headline, University of Michigan Consumer Sentiment Never Lower at 50.3. This is straight from their website. Index of Consumer Sentiment, 50.3. This survey from the University of Michigan started in 1952, and we've never been lower outside of June of 2022 at 50.0, and now we're at 50.3. We don't have it on this chart yet because I think this waits for the final revision before they put it on here. But even the lowest it had gotten ever before that was 1980 at 51.7. Also, very notably, during the Great Financial Crisis, when everyone thought the world was going to end, the lowest this had ever gotten was in the mid-50s, never dropping below the mid-50s. In other words, consumers feel worse about the future of the economy right now than they did during the Great Financial Crisis. I think it's important to let that settle into your brain. Now, while consumers are not the best at predicting things necessarily, for example, from the same survey, the expected one-year inflation rate is 4.7%, which is much higher than the break-evens what the markets are pricing right now. The market for the 2-year, for example, is at 2.5, and the 5-year at 2.36, while consumers believe that it's going to be 3.6 for the 5-year. So not the greatest gauge for everything. However, how consumers feel does matter. And when this thing drops like a cliff, it reliably shows where recessions or depressions can happen. You can see every time this really takes a big dive, that's when we are in recessions. And being at basically the lowest level ever after dropping since March of 2024. Remember, back in mid-2024, this was looking a little bit better, and since then, this has been really falling off of a cliff and now hitting absolute lows. Not a good sign for the economy. That index uses these 5 questions, which have helped economists sort of predict consumer behavior better than the rest of the questions. These 5 questions here are what determine the index. And it's mostly questions about what people expect the future to look like for them financially. So consumers are extremely pessimistic right now. I know some people are confused. We did have consumer credit for September released. People are confused. Well, if consumers are so scared and not doing well, why is consumer credit going up? After all, that must mean people are, confident about their ability to pay off debt, right? Well, not necessarily. It means they're willing to take on more debt. I have several friends down here in Florida who in the last 6 months have been struggling beyond what I could imagine. And I know they're not the only ones. Before we get to the charts, community topics, what moves, if any, did you make today? Robschild sits on hands. Coming up, economic data is still in limbo. Speaking of people struggling, it seems the courts are ping-ponging back and forth whether or not SNAP benefits are going to be paid or not. It's gone back and forth at least 3 or 4 times now. It's like there's a pause of the pause of the pause kind of a situation. I think they're being withheld right now, the SNAP benefits, from what I last read. Next catalyst, Thanksgiving. No one can fly anywhere. They're cutting flights. And it's real. To get to Miami from other places, you might have to go all the way down to Key West and then up to Miami. And I know schedules are including a lot longer layovers than are typical. These are all things that are putting pressure on the federal government. We'll see what happens with that coming up. Initial continued jobless claims. This is one of the most important things that I want to see come out. And we still don't have. Also, 2 unemployment reports now. We're behind. Can you guys believe I believe it's 39 days of a shutdown is what I read. It doesn't feel like it's been that long, but that's wild. Anyway, we still will, of course, always get those tariff updates. Thank you for watching, liking, subscribing, commenting, and supporting. No changes in the bull ratings. And see my free website, link in the description below to read through my daily reminders, current macro views, portfolio explained, and stock research center. On to the charts, starting with the S&P 500 SPX. The morning, we fell all the way until basically exactly 12 noon, and then we ripped higher, not on super high volume though. The larger amount of volume was earlier in the day going down, suggesting that, you know, it's the larger amount of money. Usually larger money is smarter money. That's why the bond market is considered smart money. It's a lot larger than the stock market. Anyway, the way that I read it was that it was around midday, I believe, when there were rumors coming out that there was going to be an agreement for the federal government to reopen. What I think happened was people bought the market based on that being good news in their opinion. I don't think it's going to be good news once it happens, but, you know, buy the rumor, sell the news. When the federal government does reopen and we get all that employment data, hold on to your hats. But, you know, it being a Friday, I do know that, you know, the options market kind of strangles the market and pulls it into the zone where, you know, more contracts can go worthless. Institutions don't typically benefit from going outside of one standard deviation. So I'm considering this to be an orderly bounce off of a pretty aggressive sell-off from the highs. And it wasn't just the S&P 500 that had this kind of move. We had the NASDAQ also fall aggressively during the day and then recover late day. Another piece of this I heard someone else talking about was that a lot of pros turn off their computers midday on Fridays for the weekend. And when the cats are away, the mice will play. That's how I see I don't think this is a reversal back to the upside. But it could be, you know, after a sell-off like this with a big shadow to the downside, you know, maybe there's some more upside. And if that were to occur, we're in a downtrend. So it's pretty clear that the bears are in control still right here. And we have equal weighted index after dropping, consolidating here. That you could easily consider that to be a bear flag. IWM, Russell 2000, just a series of lower highs, lower lows. Nvidia also flat, just like the S&P 500 and the NASDAQ. Same thing, selling off and then recovering. Seems we might have some smart money rotation into some more defensive stock areas, such as energy going up 1.44%. I mean, these are higher highs, higher lows, the opposite of the other indices. Similar thing going on in healthcare, a lot of green candles going up lately. Consumer staples, also not the same pattern as those other indices, right? We don't see fall and then recover higher. Instead, it was just a jump up higher and then drove up higher. So more strength in the defensive areas, also in utilities, and engulfing candle the last week. Solid green to the upside. When I take a look at the VIX, again, the VIX, it was intraday. It was up above 20 at 22, and we closed at 19. Also, the VVIX volatility, we were getting into that cautious zone over 110. We closed back below 105, which I consider to be a normal zone. So the way I'm, again, interpreting this all is markets believing that retail is going to see the reopening of the federal government as bullish news, and I think that's going to happen until we get all that economic data. That's what my crystal ball says right now. Next, the U.S. 10-year Treasury note yield. You know, generally speaking, trend lines do often function as a magnet. It was pretty clear we were headed, in my opinion, to this line that was connecting May 22nd to the high of July 16th. You connect those, and it's kind of funny, right? We had Wednesday's candle look like it was like, yeah, we're obviously going there. And then on Thursday, reversed completely. That shows to me a lot of weakness actually in the bond bears, let's say, which means it looks to me like U.S. 10-year Treasury note yield's going to fall earlier than later. But for now, we're back to where we were a week ago, resuming the fight basically at 4.1% in the U.S. 10-year Treasury note. HYG divided by Scheib junk bonds divided by government bonds. When it goes up, credit spreads are tightening. Down, credit spreads are widening. We went flat. That, along with copper, pretty much everything saying the same story to me, which is we're waiting for the federal government to reopen so we can get the real data, so we can decide, are junk bonds worth buying still at a spread of about 3% or not? Is there, is the demand for copper going to be going up or down? And even crude oil is still sort of pausing here. Next up, Bitcoin. This is one of the more interesting developments, especially because this is a 24-hour market. As of today, Sunday, this is just absolute textbook bear flag right here, right? And not only is it a bear flag, it's consolidating, it's winding up tighter and tighter. This looks like the probabilities strongly favor another leg lower in Bitcoin. This is not a bullish setup. This is a very bearish looking setup. I think on Monday we should reach down to the $95,000 level or lower, which is when I'll be exiting my Bitcoin short. Gold, we've been talking about consolidating similarly to Bitcoin, funny enough, and that consolidation continued on Friday. Another chart that caught my eye, Lockheed Martin. This is a good stock to watch because for me it kind of can, I believe it can give you a little bit of insider information as to what may happen geopolitically. How much is the U.S. government going to be using their military or investing in military stuff? This has been falling lately. I think it's kind of funny because back since July, since falling off a cliff, this thing has been ripping higher, sort of suggesting, hey, what is going on here? What does this stock know that I don't? And then, so it's acting sort of like a blow off top right now, but very large candles to the downside here. This may have the rise may have been because of escalations going on with, what's going on with Russia and all that. And maybe that's expected. Yeah, I mean, it's going down. It's just interesting. Another stock I wanted to bring up that caught my eye, UMich. I talked about this a good amount. I bought, this is Benjamin Graham perfect type of situation. This is the leading company in the healthcare industry, UMich. And when it's at a 30% discount to a 10-year average earnings of 25, which it was down here, that was the time to buy. And then when we got there, I said, this is the range that you want to, that Benjamin Graham would be selling himself, either at a fair price or at a 30% premium. And what's happened since we got into that range, we're actually below it. So we're actually at a discount to a Benjamin Graham valuation, not a 30% discount, but a discount nonetheless. If we do drop back down to a 30% discount, I'm going to be buying it again. Another indicator saying, the stock market's not exactly out of the woods. The Fear and Greed Index of CNN Business, we are solidly in extreme fear. We're actually deeper in extreme fear than we were on Thursday. So that bounce, that flatness that we saw in the stock market did not make this gauge go to fear or more neutral. Instead, we went further into extreme fear. I find that interesting. Lastly, just to go over the break-evens, the 5-year break-even inflation rate, we're now seeing on a very short-term basis lower highs and lower lows, while the 10-year break-even inflation rate, same thing. It's higher, lower highs and lower lows, going flat on Friday. So top of mind for me, it seems like market participants are expecting the retail crowd to buy the dip. They're going to get a headline. It's going to say federal government reopens, SNAP benefits come back, federal workers go back to work. All of this money goes back into the system. Everything's honky-dory. Everything's great. That, I think, is going to get markets bullish temporarily until we get the release of all the economic data. I'm guessing it's going to be pretty bad economic data. I think it's going to be a floodgate of terrible information. But that's just me and my crystal ball. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching and see you next time. Robschild.